it is time to shop around. Let's bring in Laura Lau. She's Chief Investment Officer at Brompton Group and joins us in-house. Laura, thanks for your time.
Thanks for having me, Morella.
As you know, the American president is going to announce auto tariffs. It doesn't sound like it's going to be expansive at this point, although nobody's really quite sure. How much of the tariff craziness, I'll call it, has already been priced into the market?
I think some has been priced in, and we did have, a drawdown on the S&P of 10%, a good correction. But it really depends how serious is it. So April 1st, we'll have a report. April 2nd, you'll have some more tariffs on. So then we'll get a better idea. But what we've seen is that, with that big drawdown, the market kind of panicked. And it looks like his typical modus operandi is go very extreme and then walk it back. So the market is hoping that he will, some of his advisors will have him walk some of those tariffs back.
Okay, so a lot of this is a part of the waiting game. Let me ask you about copper as well, because we just heard from Simone in New York that copper tariffs could be announced in weeks. What is the outlook there when you factor that in?
So typically what happens, we've seen it, whenever he announces anything, that typically you start seeing a surge of imports in to try to avoid the tariffs. And we expect that for copper because no matter what, the U.S. does not produce enough copper, so they're going to have to import some. And we understand that why he wants to do this. He wants to incentivize more production from U.S. mines. But the truth is, it takes a long time to build a mine. So from discovery to production, the average copper mine takes about 16 years. In the U.S., it's even worse. They're the second worst in the world. It takes them 29 years from exploration to production. 29 years.
They're that much slower than everybody else.
Yeah, so they're the second worst in the world.
Wow. Okay.
So putting this tariff on isn't going to change that because, first of all, he's only in there for 4 years, and the regulatory process is part of the reason why, and a lot of court challenges. So there's got to be more to be done than just tariffs to decrease that timeline.
As you know, he wants to cut regulations as much as he can. So if he does do that in the sector for copper, could then some of this be fast-tracked so you don't see a 29-year timeline?
So some of those regulations would be on the state level and the local level, so that he really can't influence. So there's other bottlenecks there that it would be difficult for him. Certainly, if he can do something to reduce 29 years to something shorter, that would be wonderful. But federally alone, it will not be enough.
Tell me what you're seeing for both the TSX and the S&P. Yesterday, we had a very steady day, not a lot of movement. Today, we have the TSX down again. We have the North American or the U.S. markets down as well. What are you looking at, or how are you describing sort of the process it's going through as it digests the tariff and the threats? So
coming into the year, the big theme was U.S. exceptionalism. U.S. is the place to be. They have the most growth, and if you want to play AI, it's through the U.S. And then DeepSeek kind of changed that the U.S. does not have a monopoly on artificial intelligence. China's doing this. And then what we also saw is tariffs has made consumers and businesses very nervous. So it's very difficult to make big purchases, like a car or a house if you're a consumer, or any capital projects, or hire people if you're a business. So what we've seen is the growth projection for the U.S. come down. Goldman, Morgan Stanley, they've all decreased their economic growth forecast for the U.S. And then on the other side, countries like Germany have said, okay, we've had 2 years where our economy shrank. We have to do something. We got to go big. And it looks like they're going to go big. So $500 billion for infrastructure. And then defense, theoretically, it's limitless. Basically, that cap we had on debt, because Germany has traditionally been very, very conservative. They don't want to increase debt. Well, we're going to spend it on defense. So the narrative has changed. It looks like the growth will be better out of Europe, worse out of the U.S. So we're seeing a lot of funds flow move from the U.S. into Europe.
I do want to get to your picks in a moment, but forward looking in the U.S., how do you expect what happens on April 2nd to affect growth outlook there? We know that prices will be up for all North Americans, likely, but what do you expect, or how do you expect it to affect growth? We hear, the Washington officials talk about a temporary pause. Are you on side with that?
We'd all love a temporary pause. We're all optimistic, but we have to also be realistic. Like, even if he puts something on April 2nd, he changes his mind constantly. So April 3rd, there might be more tariffs. It might be better, worse. The problem is the uncertainty. Everybody, especially, business people, they need to know what the playbook is. What are the rules? If we know the rules, then we can change our business. But if you don't know what the rules are, or if they're constantly changing, it becomes very difficult. So I think uncertainty is the worst thing. So even if people breathe a sigh of relief April 2nd, April 30 changes his mind again.
Yeah. Let's talk about why you're saying, or obviously why you're saying, let's move some money to Europe. What are you looking at there? What do you like?
So what we like for Europe is, as I said, the growth outlook is better than it was before, and valuations are much more attractive in Europe. So we do see some themes there. One of the themes that we're starting to see is Europe is becoming investable again, because it seems that the Ukraine war at some point will be...
There's a beginning of an end, a
yes.
light at the very end of that tunnel somewhere.
Yes, there's a light at the end of the tunnel. Trump is a deal maker, and he pretty well said in his campaign that he's going to put an end to the war. And with that, one of the themes we see is definitely reconstruction of Ukraine. So reconstruction of Ukraine, so building materials. So one company would be Saint-Gobain. It's a French company, so they specialize in energy-efficient light materials, so they would have a great role to play in rebuilding. And on top of that, the other big theme would be infrastructure spending in Germany. So they would benefit from that as well.
I do want to get you on Tesco before we have to let it go. So what do you like about Tesco in Britain?
So what we like about Tesco is it's fallen lately, and the reason is one of the competitors, Asda, has talked about lowering prices, especially on branded products. So the whole UK grocer space has fallen. But if you dig deeper, Tesco, almost half of their revenues are private label, not branded. So that won't be impacted. The other thing is, Asda's big competitor is actually Aldi, which is a low-cost discounter, whereas Tesco is more, higher end. So again, we don't think they'll be impacted. And it's a very cheap name as well. Very good operator. Free cash flow is improving. It's a long-term compounder.
Got it. I do have to leave it there, Laura, but appreciate you coming in. Laura Lau is the Chief Investment Officer at Brompton Group. Coming up.